Very good afternoon, delegates. Welcome back to the post-lunch session. We have with us Dr. Paul Jayakar, Director IT and RMS. May I request the speaker to occupy the dais? Paul Jayakar, sir. Sir will take us through two technical topics: risk-based internal audit in manufacturing industry and data analytics adding value to internal audit. Sir is a commerce postgraduate. He is a fellow member of our institute, a 49th All India rank holder in the intermediate exams. He also holds a diploma in insurance and risk management from ICAI. He also got certified in risk and information system controls ISACA. Presently, he is the Director, Information Technology and Risk Management Services in a leading LLP firm. He has got more than 30 plus years of teaching experience in finance, management, IT, computer science, computer applications, programming languages, and software engineering. He has presented papers on ICAI, ISACA, SIRC study circles, University of Madras. With this short brief, I present before you Dr. Paul Jayakar. May I now request Bala Uma Sudan, member, to come forward and present a memento to the speaker. Over to Paul Jayakar, sir.
Good afternoon to all our participants. So, actually, I've just shifted the session, just interchanged them. I finish up the analytics part first and then go to the manufacturing. Before we start all this analytics and how it helps in internal auditing, we'll just go through just briefly 2 or 3 minutes on understanding what we are actually trying to learn from this particular session. See, earlier, actually it was a mathematical concept. We would depend on what is called as sampling. And we always took a small amount of information, then try to kind of draw a conclusion about the whole data. Now that doesn't work anymore. I mean, actually it works, but what happened was computers became cheaper, people learned more things, and since the scenario has changed, you don't have to, it's like going from photographic still camera to a movie camera, a video camera. You can record the entire event. You don't have to take snapshots here and there. So you don't have to miss out anything. You can filter out the video and go through it. So the same concept, some rough comparison like that. So today what we do is we look at 100% of the data. And then we talk about some new names like patterns, insights, okay, all new terms for whatever we had earlier. Now earlier we were looking for observations, we are looking for red flags. Today we change the name slightly. I mean, basically it's all the same, nothing changes. Concept-wise, nothing changes, but how you do it changes completely. So that's what we are looking at. That's the first part of the whole background of this analytics and so on. The second part is, unfortunately, our syllabi are written so many years ago, 40, 50 years ago, that somewhere they thought there is a science stream and an art stream. And in between these two, we had a commerce stream. So BCom, BA, BSc, whatever. And somewhere in the wisdom, many years ago, there was nothing wrong, at the time nothing else was there. They decided we should study business statistics. which is like trying to adapt statistics for some kind of mean median mode, some regression, forecasting, draw a few pictures like pie charts and so on. But today we know that statistics is almost gone because any decent calculator will do that, so we don't need it anymore. Now we have shifted to something called, not shifted, but it's always there, but now we are talking about mathematical statistics. Interesting, not interesting, I don't know, now it's left to each one of us to figure out. Many years ago, most of you have studied business maths in inter and OR something in final. Actually, we need that very badly today, but those days there was no use for it because we just studied it as a subject. But today we have tremendous use for it because everything has moved off to all these quantitative techniques and all these whatever new things we're talking, statistics and so on. So I'll just briefly run you through this and then we'll have some 2 or 3 small, very brief demos. One thing I wanted to understand is we have to use a lot of tools. So tools are software, basic software. And the spreadsheet culture started from CalStar, then Lotus, then Excel. It's very old. We're talking about 1981 or 82 or something like that. So maybe 78, 79. Now today Excel is promoted in the audit office as one of the greatest developments in mankind. Microsoft says it's no longer necessary, we have to phase it out. But unfortunately, Microsoft is a business company, so they found the user base is high, but they're promoting other products, one of them being Power BI. So we'll have a quick look at Power BI also, then they added some tools to it. The other tools, some of them are open source, some of them may be developed by yourself, it all depends. So today the youngsters are not in the auditing, actually they are called chartered accountants, but all the time they are auditing. They are not concentrating on the accounting component of it. So the accountants today do not know accounts. Basically the tally boys, they just learn tally, they are called accountants. So they don't know accounts. But if a CA learned accounting, relearned accounting, all of you know accounting, because one seminar I said, we have to move away from, you learn accounting then do auditing. Now I said you have to learn technology and then do auditing, statistics and maths, OR. And they said you also have to learn accounting. We have to. Because today we talk, ancient chapters we had containers empties, we had royalties, etc. Those days there was no examples except gas cylinders and Coke bottles. Today we have freight containers, we have empties. It's huge now. The empties business is very big. After recycling has come in, and we have got all these freight containers, ships, all these things are coming. Royalty has become huge. It's no longer digging for iron and copper. Now we have music royalties, book royalties, which are not physical anymore. They have all become digital. So we are talking about intellectual property rights, content management, digital rights management, etc., etc. So we attend isolated seminars, digital marketing one side, some India something other side. Now how to put them all together, so that's the biggest problem we are all facing, but hopefully we will solve the issues as we go. I have no ready solutions, but we have to learn a lot. So I'll start with this concept of, it doesn't matter with the definitions, but what I'll do is I'll just have a look at it. Now you have 3, I don't know if the definition, but just look at the 3 different people. One is the open source contribution forum called Wikipedia. So everybody can contribute. There are some editors who will check it and say yes, it's right, no, it's wrong, kind of. The second definition comes from an author who says today's business competition should be based on analytics. That is, whom are you analyzing? You can analyze yourself, but you're actually analyzing the competitor. That's the old school of thought. But you're analyzing the entire environment, or whatever we call the socio-economic, or as you call it, PEST, political, economic, social, technological. Now it's called PESTL anyway. I got 2 more, legal and something else. We got a whole lot of stuff. So they gave it a nice name. They call it big data now. So what big data means is you don't bother with the CA Institute, see what all the other institutes are doing, and then see if we'll survive or we'll close down. Now if you look at only improving our syllabus, our class, more seminars, we are only analyzing ourselves. We are not looking at the external world. So that's what that book on computing analytics, but a lot of other authors have come in. So they are trying to explain to us that if you want to survive, you got to see what the world is doing, not what we are doing. Because there's an old saying which says if you build a better mousetrap, the world will beat a path to your door. But today, suppose there are no more mice. What's the point building mousetrap? Waste of time. So we got to look at that very seriously. The last one, of course, is like our scientific studies, Gartner, Forbes, somebody who will, all academic, they have a definition. So basically we got three definitions: public contribution, authors who are looking at business, and third is of course the usual definitions we give. Right, go to the next. Okay, I just come. Okay, the colors may be wrong, but basically what is data analytics? I'll just make it a bit easier for us to understand. See, many of us do not know how the data gets processed. So a simple question would be, you went to the petrol bunk and you bought some petrol, you swiped a credit card, where does the data go to? Fortunately, the privacy bill got delayed. So they said send it back to some committee because the rest of the parliamentarians didn't understand it. So we have expert parliamentarians who will go through it. Anyway, that's okay, let them read it for some time. Gives us some time to fall in line. But anyway, my question is, if you swiped a credit card in a petrol bunk or some public shop or somewhere, where does the data go to?
Somewhere in the cloud.
Gateway server.
Yeah, which gateway?
Intermediate.
Master
Visa house.
They come last in the chain.
The
First of all, how do
approving
you know you swiped a MasterCard? We don't know that.
The approving bank which approves the credit card.
No, not yet. So banks haven't even
Credit card
come in.
division which approves the credit limit to you.
No,
that's
no.
the first
So they will not
approval.
even know about it.
Pardon?
They'll come last in the chain.
Probably a third party thing like a Citrus or someone who maintains a.
Yeah, that's the payment gateway. So before it reaches them, it will go through what is called a soft switch. Actually, whatever I'm explaining is the same as the telephone exchanges. So when you dial a number, it filters out the same place, same exchange, different exchange, same region code, different region code, ISD, STD, filters out and then it keeps routing the phone call out. The same thing we talked about network, and if you're reading about it. Same thing happens to our credit cards. Now the question is, can I understand a card alone without knowing how networks work, and how can I understand networks without understanding how the telephone system works, and can I understand all this if I don't understand how the postal system works? Postal system is very old. You buy a inland cover or some whatever aerogram, you pay rupees to the post office and you write something, post it, but it reaches somebody in say New York. Who pays all the fellows who carry this letter from Madras to New York? I mean, local postman is not delivering it, so but you paid the local guys. Now there has to be sharing, sector adjustments, the things we have. So we never studied it because it's called the postal accounting system. We had one book in the library, it's stolen, so it's gone. So now we have no books. Nobody wants to write it because post office has become electronic. It's an unfortunate part. So that old book is gone. Anyway, it doesn't matter. I guess you could find it on some internet. If you search for it, I'm sure you'll find it. Otherwise, you won't get a copy. But anyway, all the old books are lost because we're still writing in our reports Post and Telegraphs Act 1881. Is it relevant? But nobody knows where the act is, nobody read it. But it says encryption, they are violating something, etc. stories we write. That's because we are copying from the previous report, traditional audit approach. So we didn't bother to check anything. So now we will change our minds. So what we are talking about all this analytics is when you do the engagement, you do the data study, you find insights, whatever you call them, conclusions, patterns, something, whatever you have found. Now, end of it, supposing the pattern says, supposing, cat food is good for human beings to cure something. Now, would we go ahead with it? Let's say some serious disease like let's say cancer or tuberculosis or something, and some finding says, yes, cat food will solve the issue. No, we have problems. So, not all findings make sense to us. Because we have got other reasons, bias, we have got, so many things we have in our minds, it's prejudices, so many things. So, analytics is a pure science. The answers we have to interpret. So, we will look at it that way. Okay, now we specifically decided on internal audit. The reason being, an internal auditor is today more a consultant or an advisor rather than a financial auditor, because slowly operational audits are getting bigger, And finance is almost gone today because it works on some, okay, starting from Tally, from ERP, something. There's hardly any accounting to do. And even if you checked a voucher, I mean, a lot of people take vouchers, but what exactly would that mean? It's a piece of paper today with color scanners, we got color printers, we got software to edit pictures. You can produce any kind of voucher you want, including mark sheets, checks, whatever you want, FD receipts. Beautifully done, it's sandpaper, everything come out pretty well now. So the whole concept of saying is it true, is it the right party, is it the right date, I mean maybe very small level yes it will work, but in many places we don't have vouchers. Even now in this bill they will say, Ola, you send the mail. You can fabricate a mail, I mean what's the thing about the Ola mail? You get one mail, you keep on editing it, that's all you have to do. So you can send 10 vouchers, they change dates, and the audit office in the same location. You only have to change the date, maybe change the fare 5 rupees this way, that way. It's all done. So emails also gone. So there is really no sense in checking those out. We should have checked the geo-positioning, the GPS thing, whether this fellow's phone really traveled there, gone to Google timeline, checked if he really went to the office. All those if we did, yes, all that will make sense. So now the internal auditor has to think differently now. So that's why we are going through this session today. So we will look at all that. We talk of the analytics and all phases of the audit. So whatever the phase, we write from planning up to your report writing, follow-up, etc. All that we have to apply, but how to apply, we will go through it one by one. Then we talk about the technical assistance. So what does technical assistance mean? I'm also talking about numbers. We will also look at one of the methods where we trace frauds. I will look at fraudulent financial accounts. See, a lot of statisticians and mathematicians, when they do a research or whatever, they have to finish their academic work, they take different areas. And one of the favorite areas for them is financial frauds. Whereas the commerce stream people, when they do research, it's always on performance of banks or how the loans went, where they came, how many people paid taxes, did not pay. It is all more of business statistics. There is no mathematical statistics in this where we can predict that a person will pay his taxes or will not pay. Would it be possible to predict that? Yeah, it is possible because we have this early warning systems. See, today the whole of India is working with people who have no credit rating, no credit score officially, no CIBIL, no high mark, no CRISIL, no whatever, ICRA something. How do they lend to them? On what basis do they lend to them? On what basis the auditor sign off the NBFC balance sheets? Okay, these are the questions we need to answer because that's our bread and butter. No? So we have to still live with this. So that's the technical part of it, and all the answers are coming once the demo starts. I'm sure we'll have a lot of questions. Okay. And then we also have to look at the internal auditing, reporting, and oversight. Reporting is usually post-mortem in our normal systems. It has to be, it need not even be real time, it can actually be predictive, which means you can say that this will go wrong or this will not go wrong. Because sometimes when you have interdisciplinary forums, the accountants say it's very hard to predict something. The science fellows say using Bayes' theorem or whatever, we can actually predict what will happen. Anyway, they don't agree with each other, so we leave it at that. But now when we look at some of our major difficulties we are having, now when the government says you should have known what to see, and the auditor says I do not know unless the man showed me the books or I had some whistleblower was there or something, whom would you agree with? Yeah, because we have to agree with them because India is the second in the world for taking Facebook data and all your personal data for analytics. US government is the first, Indian government is the second. So the government is very, very knowledgeable on this, and we are waiting for the income tax GST back-to-back analytics also, which will get a lot of people in trouble this coming year, 2020. So we know when the government says something, they have enough people sitting there doing some hard work on this. And coming on this side, the effectiveness of audit should always convert itself to advisory. Why do we say always convert itself? Because in one of the industry forums, the question asked was, I get a report, something says so many things, stock got pilfered, something happened. So the owner is asking, so what about this? We know it. Because the first response was from the management. They went to the police station, they paid the bribe, they got an FIR registered, they ran to the insurance company, they got the insurance, and the auditor says, you lost 40 crore stock. Then he says, so what? I mean, you were not there when it happened. So what would be the advisory? Then immediately jump around controls, something we say, but now we have to find out what the controls are, how do we implement them, and how do we know if they are effective or not. Because now somebody launched an app, you can find a parking space for your car. Okay, something you got Swiggy, everybody says Uber model, Swiggy model. No, first of all, we haven't understood the credit card model. Now the credit card is very, very old, 57 or some 20s had a loyalty card, 57 it started. When did India get its first credit card? It came to the banks like Bob card, SBI card and CAN card and so on. Now they have shifted out now. And you don't have cards anymore, the youngsters don't use cards, they use phones. Some UPI payment, some this payment, whatever. So we have, now the next question could be if I do something on a phone, not a smartphone, we have these ordinary phones, there's a government scheme, some SSIOD or whatever, where you can use a normal phone to send an SMS to transfer money. It's used in the rural places. Then what happens? The first service, receipt of the SMS is a service provider. So he's not in the bank, he's not an NBFC, he's not a fintech company, he's nobody, he's a phone company. So that's how it works. So anyway, we'll learn more on that. But then again we talk about, it's called, if you're reading the RBI is one of the bad regulators, I would say, because they have copied from abroad. So we are talking about real-time and near real-time analysis of everything. Not just the cyber security, but the data, the cash movements, the SLRs, the CRR, whatever, all those so many things we have. Now all this says fine, I mean all this is fine, but when the auditor turns up, we have some concurrent auditors, so many auditors, we have statutory, something. Now as these things get more and more centralized, more and more integrated, how many auditors will a bank need? One bank will need only one auditor. That's all, that's the end of the story. And if 4 banks get merged into one, then 3 auditors are gone out of business already. So that is where we are. Now we have to look at it very carefully because it's going to affect our careers, or rather our businesses, or whatever we call it. Okay, the next one. Okay, these are all the lessons we have learned. One is the cultural change, and today we talk about millennials, and these are all terms we use. But basically, it is a current customer. The guy who spends money is not using the traditional, what you call the financial chain, audit trail, is not there. So that is one big change, cultural change. So instead of stealing, picking your pocket for cash, now they steal your phones, they steal your laptops, they steal something else. Pickpocket also survives, he also is doing analytics, so he is in business. Then we have the insight communication. How do you communicate your findings? You can have reports, you can draw pictures, graphs, but we need to do it through storytelling. And maybe some other day you can study that. If you have patience, you go through a book called Storytelling Through Data. So you collect a lot of data. Let's say we had attrition rate in a company. So we put a graph and showed this fellow some 2 months. Say April and March, April and June, April, May. Okay, April, May, some people left your organization. Then they'll say we know about it. Now you have to tell them how much business you lost because of it. Then he says, okay, he wakes up, okay, lost some money on this. Then you have to tell him what's your margins which took the hit. Because there may be highly profitable businesses which this this attrition took place. Then he sees that. Then you have to transfer it in terms of reputation risk, non-delivery, liquidated damages. If you put all that into a picture saying this is what happened, fellows left, because of this we lost business, lost money, got reputation hit, liquidated damages, now in serious trouble, they'll immediately say recruit bench staff or extra staff. That whole one picture you gave the owner or the management, whatever, is called storytelling through data. So now the boards are saying, don't give us reports, don't give us PowerPoints. You give us animated pictures, and it's called storyboard or whatever you call it. So that also we'll have to have a quick look at. Okay, the buy-in is all stories, because today every owner is after money. The bigger the company, the more money they want. So you don't have to sell anything, they'll buy your idea. Then we have the analytical skill shortage. We have this problem worldwide, but in India the unfortunate problem is accountants don't want to study maths or statistics, and the mathematicians don't want to study accounts. So the story is closed.
If they knew maths, they would have gone into science.
No, we can still change. No, we'll change. We'll learn fast. So we'll learn, okay, so we'll learn that. Then the other part is the implementation. Yeah, why is it poor? Because those who implement don't know much about it. It's like these cable TV fellows, they hire the fellows who test for passing a cable TV from those days when cables were popular. The fellow has to climb a tree or climb a pole, or you can't have a highly qualified engineer who can't climb anything. So what will you do? So that requirement, now today we have highly qualified accountants, but we are not able to get this part going, the implementation, the whatever installation, etc. Then that confidence in data is low, but now we have a lot of simulation and cleaning up data. We can do large amounts of data. All that is available because government itself runs a site now that data.gov.in, where you can get all the data you want. Well, not all the data, but most of the data you want. You can get it from World Bank, from the United Nations, from different people give away a lot of data. It's called data sets, huge data. And very soon I think the income tax and whatever banks, non-sensitive data, they'll mask off the personal identifiable information, and rest of it will be available for you to work with. Okay, next. Okay, continue. Okay, now this is what we are saying. The auditor has a lot of things to do. He has to kind of make the business go faster. You're a catalyst. And then you have a strategist. Okay, they changed all these names just using an old presentation. Steward and operator, but today they call him an evangelist. He's supposed to go and sell ideas to the management, telling him why is required. That's why they said value addition, which you bring to the audit function or the organization. It's like a waiter in a hotel. You went for coffee, he says Bonda is hot or something. He's basically trying to get more business for the hotel. So we have to do the same thing. Only thing better way. Okay, next slide. Okay, now we have to look at all this stuff, strategy, people, we understand process. Process part, there's another big gap here. They removed this computer paper, so there's no flow charting now. So the processes which have to be captured, because today we are asking for process diagrams, risk control matrix, whatever we call standard operating procedures, etc. Auditor is not getting involved. So the basic thing is we don't understand the process. Now, without understanding the process, how do we know where someone will cheat, or how will you catch the fellow who's cheating? So that is the biggest problem now. So we said, asked about the card, then we came to the phone, but now you have that near thing where you can go near the machine, it will pick up the signal up to 2,000 rupees, it will debit your phone or debit your account. Now all these technologies, and suddenly if I ask the question, is it Bluetooth, Wi-Fi or infrared or whatever, what will you say? Because suddenly we'll have a report. All risks have been addressed, and in the notes, you'll find there's a risk statement by the directors also. They say all risks got rid of. Then in the notes it says all applicable acts have been taken care of. I think company secretary says that. Then there's a whole lot of stuff out there which is totally untrue. Okay, so that we'll have to look at that. So that is why we need to understand processes also, because that's one of the important things. We have books on them. But best is if you have a workshop on it, draw some pictures, we'll learn. Okay, then technology is fine, data is fine. Now what we are talking about is you have to change the mindset. Why do we say that? I mean, all of you are here because you changed the mindset. But but if you don't want to be here, then the question is how do we encourage auditors to move away from basically what we say is you have to unlearn and relearn. Now you spend 40 years or 30 years or whatever learning something, and suddenly it's gone, like service tax went off. Now what to do? The books can be sitting there, and if you want you can donate them or something, but basically 1956 Companies Act went off, what do you do with it? It's gone, leave it. So then you have to move on. Suppose the Companies Act itself went off, doesn't matter, let it go. So that is what we need to understand. Now auditors get stuck with this whole thing, because many meetings they'll start with, in those days, in that thing, something, they will start talking. So even check truncation system is obsolete now. Most of the banks are sitting with the scanners doing nothing. Everything is gone now. So we need to move on. So that is why we have to change the mindset. Second thing is, instead of reading my data, why am I reading everybody else's data as an internal auditor? Why are we doing that? Now we may have data, but what do we want to know? Suppose competitors are not doing well. They could be poaching on your employees. They could be stealing your finished products. They could be stealing your ideas. Now, there's a whole lot of problems we are facing. So how do you know the Swiggy fellow is only delivering food or is also dropping people somewhere for a charge? So he's got a bike. So things can happen. I mean, there is an immediate audit, it's a fraud. So there were no controls to take care of this fellow. Some issues have gone. If you read IoT, insurance companies, they have a lot of frauds in the insurance company, biggest headache they have. So they are using this IoT are basically sensors. One of the things they want to do is they want to put it on the Swiggy bikes. So when you start it, the insurance starts. When you stop it, it stops. The geolocation tells you agreed upon route or non-agreed upon route. So that's one model they brought for the insurance. You've got a lot of these models where they're looking at fraud. Health wearables, they've got a separate committee on IRDA for that. So even before you have a heart attack, the insurance company knows they'll alert the hospital, the ambulance is at your door. So they've got all this information. Now they want to cut the frauds off. So they're trying hard. Anyway, let's see how much works. Next. Okay, there's a long story we have here on all this testing and also on the technical side. It depends how much you want the studies left to us. I mean, like swaps, derivatives. I'm going to study some maths, he didn't like it, he left it. And probably went to some legal something, he didn't like it, he left it. Like whatever, like cyber law or something. And the last year when 2019, when the statutory audits for banks had to sign off on the cyber security as a part of the statutory audit, what did they do? They all went to the Reserve Bank and said we can't do it. It's a shame, but anyway, that's okay. That second part is, then Reserve Bank said cyber security is a separate policy. Because of that, now everybody has to write a separate cyber security policy in their organization, board approved policy. So they have separate auditors who are certified or whatever CISA, or some name they got for it. No DISA is there, so maybe have to insert it later. But anyway, that's what happened. Now, how hard is it to learn technology? You moved from manual vehicles to automatic vehicles, you moved from Doordarshan TV to antenna TV to cable TV to satellite TV, now you have internet TV. How hard is it to change? You moved from coal stove, gas stove, whatever, so now you got induction stove, you're moving them. I mean, so why do we resist this? Okay, that's the answer you have to give. So we have to move on, that's on the technology side. The other side is we need to align all this, whatever we are doing. Alignment is very simple. It's something like we change from attendance register or tokens to attendance register to swipe card to fingerprint to something. Now they have face recognition. Now the next is you have vision processing, which means as you walk in, it kind of senses your outline, sees how you walk, your swagger. People have some thing immediately says so-and-so has come to work, and you're trying to crawl out somewhere also, it says so-and-so ran away. So it identifies school students, college students. You can put in offices also, no problem. So when you do that, and the auditor comes for his payroll audit, now he wants time and attendance. Earlier he had some register, then some card, then some time out of biometric. Now what is he going to get? I mean, how is he going to verify that the payroll was correct?
Biometric data.
No sir, can't answer. No vision processing. The cameras come from China, they are cheap. The software is cheap. Everything is cheap now. So the company feels better to go for this new technology and be done with it. It's cheap now. So no, cost is a major driver for adoption of technology. So once it gets cheap, I mean, you can't prevent it. Because the company will say, I'm saving money, so why should I do all these complicated things? Okay, that's something we'll have to look at. Any ideas how we are going to audit our credit cards, our attendance records, stores? Okay, we'll find out. Okay, now we have 3 models for the operations. I would suggest the last one, the centralized model, because we are not supposed to treat payroll as something, procurement as a different thing, sales as something else, and we have checklists. We have this culture called checklists. We will ask, it's whatever, sales, procurement, HR, payroll, something. We got a whole lot of checklists. So we'll say something like, was it authorized, were the bills produced, something will write and we'll say yes, no, something will be writing. Now instead of that, we now have a central area where the data is picked up and processed. Suppose we take procurement, procure to pay. It could start with the requisition, then goes to stores, stores available done, No stores, then it has to go to purchase. Purchase will have approved vendor systems. Approved vendor systems will have their own evaluation, whatever method. One time vendor, regular vendor. Then you have open POs, non-open POs. Then comes the delivery. Gate, some people do gate, some people do stores, some have inspection, some use up the thing while it's not inspected also. Then you'll have rejects, returns, etc., some credit notes, debit notes. Then it moves on to your production, inline rejections. Then it moves on to your finished goods, then you have cost of goods, you have the value added, etc., etc. So which checklist are you going to use for this?
That should be one for everything.
Yeah, we have big checklist, or we'll have to get that previous one where we talked about process, dependencies, all those things, and then decide what exactly I am going to do. So the old checklist which you are getting from the internet, CI Club, etc.,
Audit, right?
no use. Okay, so we'll have to now work on this. Okay, continue, next. No, you can post them in CI Club, that's what I'm saying. I mean, you can prepare the fresh ones and post them there. Okay, continue. Okay, now we are talking about all these, okay, these are the new words we use. Value drivers like high risk, low risk, whatever. Everybody uses this risk business. So how do we evaluate the risk? I mean, mostly it is intuition, we think something is risky, not risky, something like that. But how do you evaluate risk? Now we say risk-based internal auditing, that's next topic. So if you don't know what's risk, then what are you going to base it on? Okay, now suppose this hall had a fire. Do you know where the fire exits are? Emergency exits. You know, they close it all up and it's locked. Where are the fire extinguishers? Okay, now suppose somebody put poison gas in the AC, what would happen? After knowing all this, you came to class now. Because I've been telling this for a long time, nothing happens, so I'm here. But these are the risks which we face. Now we have to value that and evaluate the risk. Would you say high, medium or low? Somebody hates the CM shoot, let's say. Or your client doesn't like auditors. Something like that, okay, whatever. No, we have not evaluated anything. So it doesn't matter, it's okay, we will learn. So see, this is one of the biggest problems they have. When the audit company asks the auditor, how did you rate the risk? I mean, why do you say high, why do you say low and all that? The auditor says if it is a repeatable process, it's low. If it is not repeatable, it's high. If it is the first time he's doing it, something else, and some story which doesn't make any sense to anyone. Those are definitions from Harvard definition, 30s, 40s, something like that. Those risks are not risks anymore. So what is the risk? Risk of a competitor's employee coming and joining your organization, stealing all your files is a risk. How do you know he's an implant? And a very good employee, but Superman, he does all the work well, but he's basically going to steal your files. So how do you find this, identify this chap? So if somebody is over efficient, you have to be careful now, that's what we say, so watch out, so some difficulties could be there. So those are what we are working with. The doctors do that. You join a hospital, work very hard, build a big patient base and then quit. So that's a common model now for it. Float a new company, have a high valuation, sell. So these are the models which are now risky, which maybe at one time we thought great employees had to be rewarded and etc. Now you're getting suspicious of it. Okay, so I could the next one. Okay, the next one is okay. That's what we say insight. Basically, insight is nothing. All auditors are insight. Insight is you get some findings. Now you have to say, like I told you, it's like a good employee. Now would you rate him as a high risk or a low risk? Now there's a student who's got high academic marks, etc. Now how would you rate him? Intellectually high or intellectually low? Would you retain that fellow? Because he said talent retention is a big thing now. So many things we are talking about. Now India was a large, very large thing for this server administration worldwide, a database, security, all that. Now they have gone for cloud business where they do DevOps means you write the code in the program itself because they have virtualization, so many things. Now all these fellows are going unemployed. I mean basically companies are losing business. Now there are two options. One, train these honest, loyal, highly experienced employees or pick up new fellows. So they went the first choice. They train these fellows, get them free coaching, whatever they paid for the business, all that. But at the end of the road, they didn't scale up. So now they are saying they're going to be kicked out and you're going to get fresh new people who knew nothing. You train them from scratch and take them in. Now look at your CA office. Would you like to train old people into technology or take young people and move straight into technology?
Second
That's, you have to take second option. So have a look at it, but I'm sure you'll find some good people somewhere. Okay, continue. Okay, now all this we know data, we know information, we process it. We came to knowledge some many years ago, where we call it knowledge bases, KPOs and so on. But at some point, from knowledge they said you have to get wisdom. Now what is wisdom? Now they say knowledge is taking things apart. Wisdom is able to put it together. So you can easily dismantle your watch or something, but you can't put it back. You get some 5 screws left over after fixing it, then we haven't still got the wisdom part of it. Now the wisdom is what, that's not done by machines now. So we call it machine learning, whatever we call it, artificial intelligence, etc., etc. We have names for that. But what we are saying is, again immediately people say replacing a human being. No. Human being centuries ago was not as wise as we are now. So people centuries later will be far more wiser than we are. So we are not replacing a human being. What we are saying is, as the usual textbook stuff, routine tasks machine will do, creative work human will do. Now the question is, what is creative work? You take accounting, you take auditing. Is there anything creative in it? I don't know, you're the people who have to say yes or no.
There is a creative accounting.
A creative accounting, that's called fraud accounting. That is there, so that is definitely there. We have fraud auditing also, okay, that also we have. No, they are the real creative chaps, but they don't practice. So, busy just stealing money somewhere. So now we have to look at that part, and that is not a challenge to auditors alone, it's a challenge to lawyers also, because they are also getting, because they have a lot of knowledge, they read so many books, cases, brief they write. Today machines are doing it much faster than they can do it. Searching is much faster. So, I mean, it's not just us. I mean, there are a few others along with us, but that doesn't make us comfortable. So we have to move on. But if you went to a doctor, for instance, if he is willing to learn and adapt to new technology, where we spoke about a skilled surgeon. Today, if he is doing robotic surgery, what is he doing? He's playing video games. And basically, he's moving something and touching screens, and he's playing the game correctly, then operation is successful. He loses it, beeps and says 1 level down, patient's gone. So, but then he's adapting, they are adapting themselves. Must have heard of robotic surgery, all that stuff, non-invasive surgery. Now they are adapting. I mean, what else would there's no other choice? But then for us also, maybe the choices will reduce. We are getting to more and more developed countries, so choices will reduce. We cannot ignore it after some time. I don't know if you've seen today, we say technology companies run banks. Banks adopting technology are a failure. How many agree or disagree? Because everything they say fintech. No? You want to reconcile your ATM, there's a company which is running computers which does it. You want to do credit cards, there's a company is running computers which do it. Government runs computers, at ACH, NPCI, they're all machines. We simply say private limited or some limited, that is only a structure, but there are no people there. Not like this Reserve Bank, GM, DGM, AGM, you won't find all those guys in these fintech companies. So they are basically machines. You submit the data, it does something, reconcile, calculate, credit, debit, send messages, SWIFT or whatever it is, NEFT, RTGS, all that is being done by machines. Then we have InsurTech, where insurance is also moving online to avoid frauds. Most of the portals do the business for them. Now we have this regulator technology, RegTech, which both the companies use and the regulators use. So given that scenario, what we find is that the wisdom part is getting higher and higher. So governments now have a lot of wisdom. Anybody applied for a US visa recently? Or last 6 months, last 1 year? They do a social media audit before giving it to you. They don't just take your financial statement, and there was a time when auditors used to sign, this guy's got enough money to go and study and come and all that. Now they say, okay, that's fine, Indians know how to get the certificate, but now you want to check your background, the social media audit. So that's what they are doing. Okay, continue. No, please keep in touch with what India is doing. Not world we forget, India not enough. Okay, now we have this various things. The last part is, I told you the storytelling part. How do we present this data to you? I mean, how do we sell these ideas to the management, to different stakeholders, whatever they call them, stakeholders basically, a chap whom is going to pay you the fees. So if he's got money, now you want his money, you have to sell the idea to him. So how do we do that? So we talk about all this visualization, where you have to do slicing. Dicing means you drill down, you drill up, you show him graphs, you show him how it will affect various things like health of a person or his revenues, or not just money, but today we talk about sustainable accounting, both from the organization's point of view and the government's point of view. There are some very peculiar questions which people ask in many forums. Okay, the company is polluting something. Is it sustainable? What do you think? Because some of the stuff we need has to pollute. Chlorine is, plastic is made from chlorine, and we need for ammonia for fertilizers. So then we have to stop plastic, we have to stop fertilizers, stop everything. Not possible. So what do you feel? What does sustainable mean? Because somewhere down the line we lost the meaning of sustainable. We decided sustainable means no pollution. That never happens. No, sustainable means,
How do you live with the pollution?
That is sustainable. There should be a period.
yeah, how long you'll last? How long you'll last? Because see, when I was in, maybe just finished school, whatever, they said oil reserves will last 40 years. And they said after that it's all gone. Gulf oil, Alaska oil, whatever, there's some Gulf, Mexico oil. 40 years are over, more vehicles are running, they are consuming more and more fuel. Nothing happened. People found solutions for all of them. We have alternate energy, we have renewable energy, we have non-polluting nuclear plants, we got solutions. Now you're going to electric cars, then petrol companies are now putting taxes in their own countries because they have no money now, so they're going broke. So humans are not going to say static. When we say what will happen 10 years from now, we also should understand what the human will do 10 years from now. We are looking at today's human and saying 10 years from now he'll do something. He won't do it. I mean, why will he do it? So that's like printed books, for instance. You're not reading them anymore. So if you don't read, maybe the younger people don't read, then what's the point saying that 10 years from now they read electronic books? That also they're not reading. Audio book also they're not reading. So what are they doing now? Googling, WhatsApp, whatever. Need based only. I want an answer to a specific question. Should I have a cost audit? You go somewhere, research, it will say yes or no. Then of course see the year, it will be old also, but you check it out. And once you get the answer, chapter closed. Next question you ask, again you'll go and check it out. So they are not even, there's all those books you stack behind you, take a photo. That's all gone now. They're not interested in it anymore. So given that kind of a scenario, how do you present things to them? They don't want to read even a paragraph. They want a straight answer, one definition. So that is, they'll be board members, no? So somewhere they'll be somewhere. So we need to cater to that demand also. Okay, so now this is basically more or less what we have said so far. So we need to start with some purpose or objective, finish up with a visual. Maybe visual will go to audio, we don't know, maybe things change. As of today, visuals are selling, so it's fine. Because after some time your phones won't have keyboards. First they lost the real keyboard, now screens came, that also goes. Your phone will become a small stuff somewhere. So all you need is speak to your phone, that's all you have to do. So you speak dial or whatever, search or whatever you're doing, you speak to it. How many of you talk to devices? Like your phone, Google search, Alexa, all this you talk to them. So after some time, first we said typing went off, then the keyboard went off, everything went off. Now even writing will go off because you're talking to stuff. So even our exam has to be, you have to talk to ask you a question, you have to answer, that's it done. So that's how it's going to be, and that's not very far off because the devices are already available. It's a cost factor, cheap, adopted, that's it. So done. Okay, continue. Okay, we will look at it. Okay, continue. Okay, I think that's it. So that's the first part. Now we have to go through some demonstrations. So you want to start on the mic? She is Deepika from my office, and she will now take you through a few demonstrations starting.
So actually we are going to see how to do analytics in Audit. That is how to execute.
We just have an order a little differently. We'll do finish first, then we'll get over. So actually what I've done is we are looking at 3 different tools and 3 different reasons why you're doing analytics, application analytics. One is you're going to have a look at some ratios. Some of you would have heard of Altman, Benish, okay, basically fraudulent, companies going insolvent. So those are what you would like to look at first. I mean, not you would like to look at, but we're going to do that first. We just do it through Excel and we'll close that. Then you can also have a look at how JE testing is done. That's the usual, because most of the ERPs today, they auto post the JEs. So there's no real audit trail which are getting a connection. So audit is still working JEs, but as I told you, accounts itself may die soon. I mean, not tomorrow, but maybe shortly. Because what's the purpose of accounting? Basically, we want to keep track of something, that's all. So the camera kept track of attendance, and why do you need an attendance register? So this is what's going to happen, that's fine. And the third one is we'll have a quick look at how you analyze weblogs, that is web server logs using R language, because you have to study cyber security also, because the government has clearly stated wherever a business runs on internet or on internet servers, cyber security is a part of the statutory audit. Where does it say that? No, if a business had a bank account, you had to do the reconciliation. But where is it written? Not written, because anyway that's taken for granted over the years. If a business had employees and had PF or something, we call it compliance audit. But who defined compliance? I mean, we don't know. I mean, each company will have its own acts, some 200 acts, 500 acts. Some 3 acts we know, we follow them. So who told us that you have to treat cyber security as a part of the statutory audit? Okay, that's homework for you. You have to find out. Anyway, we'll finish it. This remind me end of the class. Okay.
So basically we are going to see 4 template sheets for 4 of the models. So these are basically 2 statistical models and 2 mathematical models. So Altman Z-score and Oslon O-score are bankruptcy indicators. Basically these are statistical model, regression based, where we are trying to put in our financial statement data and predict the future of the company. That is, for the next 2 years, if the growth or the parameters are going to be like this, what will be the output? So basically, since it's a already proven model, we have to just adopt the formula. So basically, template sheets are more than enough to undertake this test. So here we have already built the template sheet with formulas, but the parameters are discussed. So basically, Oslon O-score is having 9 factors. So we are having 9 factors. So maximum of the factors deal with current assets, current liabilities, cash and cash balances, net income. So basically each of the parameter is given a weightage. So in regression we used to write a single factorial regression, we used to write as y is equal to mx plus c. That is, we are giving a weightage for the dependent variable. So how much the variable is going to change for the dependency. Here the weightage is fixed because balance sheet for the particular industry is going to work in a similar fashion only. So they have given different weightage for different industries. So the commonly used is for manufacturing industry. So these are the coefficients for regression which is given in the model. So if we are going to work the model out, we'll be getting the output in terms of percentage. So basically, sorry, this is not percentage, this is default percentage, T, this is the score. So basically this score, if it is going to be less than 5, so generally if you have remember your statistics, we'll refer alpha as the level of acceptable risk. So we used to assume like 95% confidence means 5% alpha, 99% confidence means 1% alpha. So this model is based on taking 95% confidence level. So 5% is the risk appetite. So if the model is giving less than 5, we will it is less than assumable risk appetite. So you will accept. If it is more, then you will reject. So this is one model. So basically there are a lot of white papers on these models. So we are just running through the overview. You can further read when you are applying. So how we are using it like base due diligence. So before taking up the assignment, running through the past balance sheets, not just doing normal ratio analysis, we are running through these analysis also. So specifically it's used more in forensic audit, where you want to substantiate your analysis with some models or some forecasting techniques. So there it is more useful. Apart from that also on a basic due diligence level you can include this. So next we have Altman's Z-score. So this is also a statistical model. Here we are having 5 factor analysis. So these are the 5 factors. So basically since we are going to talk about bankruptcy, all the factors are related to liquidity. So here we are having different scores actually. So here actually this model is very what to say changing. It's dynamic. So here in the model in the white paper or the original model itself, it's like for different industries, for trading, for manufacturing, for different industries, what should be the score is also predicted. So generic score is 2.6 they are given. So this is also actually a regression model only. So for each formula we are having weightage based on which we are actually calculating. This will be the weightage actually. This is the weightage. So this is the coefficient based on which we are following. So here we are having a number as 2.2. So if it is less than 2.2, we have to accept reject. So basically this is included just to spread the awareness that these things can be used apart from ratio analysis. So mostly we are using ratio analysis as the only evaluator for financial statements. So these are also available. So this Altman and Oslon is used for bankruptcy, and we have Benish and Montier. So Benish is more famous among all the 4. So Benish basically shows any manipulation in books. And if you see Montier, it's called Montier's C-score. All the other Altman's Z-score and all is based on their name, second name. But actually Montier alone, it's based on cooking score. If the books are cooked, you will be able to identify from this score. So these 2 are parameters used for identifying any manipulation. So this, how we can explain this is this something like anytime we sign a balance sheet, we check for there is no gaps in the balance sheet, that is no holes in the balance sheet. So all are proportionate, debtors are proportionate to sales, my stock is proportionate to consumption. So I am going to check my balance sheet on overall parity level where actually all my figures are matching and there is no specific gap. So actually this score also works on similar fashion. So here it covers almost all the parameters of P&L and balance sheet. So all P&L balance sheet will be compared to P&L items will be compared to balance sheet. All balance sheet items will be compared to P&L. So basically it will say, so here if you see the score is like for each thing you have an index. So these are actually the 8 parameters. For each parameter I have a base ratio. So if each ratio which is not tallying, it means in that area there is a gap. So that's how Benish and Montier works. So Benish also there is, if it's a smaller company, it's a 5 parameter Benish is also available and 8 parameter Benish is also available. So actually 1 year data itself is enough to put, but since we are going to take some decisions based on this, it's better if we are having the trend. So actually when we take, at least we take for 3 to 5 years depending on when the company was incorporated. So Montier's score is also very similar. So it has 6 parameters. Each parameter it fails, it means there is manipulation that is happening in that parameter. So 6 parameters are there. Here it is like equal weightage. Each parameter is given 1 point. So the total score is 6. If total score 6 is earned, then it means the books are fully manipulated. If 1 or 2 means that particular parameter is manipulated. So these are indicative. So if you see overall survey conducted on implementation of this system or this models in actual scenarios, more than 75% it has been correct. So certain models 17% failures were there, certain models 20% failures were there, but more than 75% it has indicated right decision only. That is mainly because it is mathematical and statistical models. It is not based on any discretion, and even the weightage given is mathematically calculated weightage. It is not like Benford where he has brought out a distribution which any naturally distributed number should follow. That is numbers brought to him, but these are actually weightages derived from the risk parameters. So maybe there may be small change in the parameters or the coefficient if we are going to take different confidence level. So generally all models are built on 95% confidence level. So if there is going to be any change in the confidence level or the assumptions we are making, there might be small changes in the coefficients. So apart from that, it will work right. The formulas are actually for each one, actually it's
Just 1 minute.
so actually I can show you Benish. So in Benish we have to calculate days receivable. 1 minute, is it visible? 1 minute. Okay. So the 8 parameters for Benish are day sales in receivable index. So for that, current year receivable by sales divided by previous year receivables by previous year sales. Next we have gross margin index. For gross margin index, how we are calculating. So Benish takes current year and previous year, but certain models take only 1 year. So we are talking about asset quality index. So basically these index may be basically all this is based on ratio analysis only. The weightage and the coefficient are only the mathematical or the statistical component which is input in this system. So these are the P&L items. If we see, sales is taken, stock is taken, depreciation is taken, and administrative expense is taken. So leverage index will compare your debts to total current liabilities to total debts. Then we have accruals to. So basically, it covers all the areas of P&L and balance sheet. Wherever cash flow is affected, it will take. So one of the major reason why we find difficult to read any balance sheet or P&L is its accrual system. We have lot of non-cash item in both P&L and balance sheet. So if we are removing that itself, it will give you better understanding of the real position of the company. So that is also one advantage of taking any of these models. All take only cash parameters. So if there is any non-cash parameter which is included in that, it will not tally because P&L will be inflated, but in the balance sheet will not have corresponding current asset or current liability or reserve, which is impacting this. So with this, I'll close this mathematical models.
Any questions?
Any questions, sir? Will address.
Do you have any?
Use the first two
Yeah.
to ascertain if a company can go on as a going
Yes,
concern.
yes.
Yes, sir. Correct.
There is one bankrupt going towards bankruptcy or surviving. The other is fraud. They are manipulated numbers.
Basically, it predicts for next 2 years, sir. So it's like if the score is less than the particular model, then it will be like within 2 years there is probability that the company may not be able to survive.
How do you
software for these models?
No, formulae, sir. This is Excel.
Yes, yes. In the in Excel we are having formulas, sir. We have taken from statistics books, sir. Actually,
All books. I mean, if you want,
How
someone
new
wants
the
a mail.
Olson
Should be
one?
available on
Sir?
Excel.
How
Which
new
ones?
the Olson
Should be
one?
available on Excel as a formula.
yeah. In Excel it's a formula.
No.
Also?
You have to type the formula.
Even
Like, it is not a
template
function.
sheets are available, sir. Internet
Yeah,
also.
you can download it.
Yeah.
But only thing. The
Actually, if you
score-
want, I can ask him to mail
Yeah, I will.
this through institute also. It's like not proprietary because these
No,
are all
that's
models.
not everything is acquired
Yes.
from outside.
Yeah, only the figures are proprietary, so that alone will delete. But actually, these are some sheets are available in internet, but that we cannot directly use. So for audit firms per se, we have.
Share with us.
Yes.
So that you can work on that.
Yes.
It's all available on the net.
Yeah.
These models can be used for
Z-score I've
startups.
heard.
Yes, sir.
Olson is new sort of.
No, again,
No, sir. All are equally old, but not famous.
Yeah, let it.
Sorry.
No. No, the problem here is no startup works on profits. They work on valuation. So that again, we need to use some other model for them. These are all regular running companies.
Are there models available?
Yeah, you have. And he was telling about the
Valuation
weights.
models are only available, sir.
No. You have models which show you whether the startup is doing the right thing or is going to backfire. We have, it needs a lot of research. So Because most of the research comes to you from non-accounting
Yes, sir.
background.
So none of this is from accounting sides. It's from statistical research portals.
I'd like to see more commerce people in the research rather than non-commerce and commerce research. Okay, whatever we look at, that's okay. But and she was telling about the weights. Most of the weights we get are from US, Europe, whatever. It will have to, the weights will have to readjust. It's called machine learning decision tree based on the type of industry. Because if you're in an industry where you're importing something, you may even do an annual quantity of import. Suppose you're procuring from the local market, maybe daily, weekly consumption. So those weights will slightly change. But overall the model works. That 17% mistake is okay, because manually everything is wrong what we do. So 17%, 20% error is acceptable. Any other question? Others will go to the next. No, I'm just trying to kind of illustrate. For instance, you use a spreadsheet, it may take half an hour, 1 hour. You have done much more work than all counting, calculating, tabulating. So this is more reliable also. Right, you can go.
This one is for the consumption of the auditor or to give it to the manager?
No, sir. Consumption for the auditors.
The auditors he poor man, he signs. In fact, in one meeting they said, one meeting the owner of the company, CEO, he said, internal auditors also should have metrics to work with, KPIs and KRAs. And he also said he's happy they are going to jail because that means the profession is now being recognized as a very important, you're playing an important role in the economy. Just like a finance company, the owner or manager gets arrested, he said if you arrest the internal auditor, it means he was one of the very important people in that organization who failed in his duty. I mean, he had a different way of thinking, but I think he was right. What do you think? Yeah, okay, it's right. And also he said reasonable assurance. In fact, that is true now worldwide. Nobody wants reasonable assurance. What is that reasonable assurance? It's like tuition class now. You may pass, may not pass. Now we say you have to pass, otherwise we refund it.
Sir, based on these models, can we qualify our report on going
So no, sir, you can define your audit procedures. So what all things are failing, you can actually.
Based on that, you qualify. I mean, you have, because we need audit evidence.
Correct.
And if it ends up in courts, then the lawyer will also cross-examine the auditor. So if you go to jail, you have to go to courts.
Sorry,
Yes.
would this be before the audit that we take up?
Yes, sir. Safer, sir. If you do it before the audit, so you get a trend. But after the audit also you can do it. A lot of auditors are getting to valuation. They are getting into insolvency. Some of you will be insolvency professionals. They are taking up new roles now. And the new roles with the traditional knowledge is very dangerous because it's like gearless vehicles or whatever we call it. So better we move on to the new techniques to do our work. It may not be covered in the course, but you can just add it on, so no problem. No, we have lots of.
Any more questions?
No, they've understood. No, please go ahead and try these things because it's not over with 1 hour. Try them out. I'll mail it to you. I'll make an email also. No, this is all to be given away for you to learn. So, actually, I can honestly tell you now, 38 years I've been teaching here. We don't see many auditors in the computer side. If they are there, they work for the software companies. They don't work for consulting or management. Very rare.
Okay, so actually now we are going to have a small demo like on
It's a coffee break.
coffee breaker, sir.
No, we said some 4 o'clock.
4 hours, sir. 3:45.
So then we can continue.
It will take another 10 to 15 minutes. Sir. So basically we are going to see a product which we are using for audit of full data. So that is in Excel we have major limitations on processing capabilities and number of rows. So whenever, so for example if we have to do audit of a large bank or a NBFC or let it be a manufacturing company, stock, even if we want to value stock, the stock line items itself is more than 2 lakhs, SKUs itself. So now I want to value the moving average, then it's going to be very difficult for me to use Excel to test it. So we need a tool which can process that much data and which is user friendly. So for that we have finalized and we are using a tool called Power BI. So this is a Microsoft product. So as sir was telling, Microsoft is promoting its new tools because Excel has lot of inherent limitations and they are unable to withdraw. If you see up to Windows 7, they are withdrawing support. But actually they are not able to withdraw support for Excel because the user base is so high and they are not able to give an alternate product for them. So now they have given this product for free for the first time. So this is the only product which doesn't require a license to operate. So it's called Power BI desktop version. So it's available for download from Microsoft.office.com, the same portal where all the Microsoft updates come. So what this portal does is it works on Power Excel. So if you know the Power Excel, we have Power Query, Power Maps and Power Pivot. So it is built on that only. So if you have used Power Query, Power Pivot or like Power Pivot or Power Maps, then it is like almost very similar to that working knowledge. And the formulas, whatever we used to use in Excel is exactly the same. The only difference will be here we are going to have a front end and a back end. So now if I'm going to just show you how we'll have to import data. So for our classroom discussion, we are going to use journal entry testing. So for that, I'm going to import our expense dump. So I'm going to connect to an Excel file. So when I'm loading my sheet itself, it's creating a model. So if you see what will happen is, it will have two instances. One will be Power Query Editor and one will be Power BI Desktop dashboard. So it's going to work on two different data set. 1 minute, this is not the data set. In desktop, I see. Okay. So basically what is the advantage of using this tool is you can connect to any database. So it's not just Excel. If you see, it has interface. So what we call is data connectors. So if a company is using 5 applications, they'll be using APIs or data connectors to transport data between different applications. So now in this application, what advantage we are having is it has all the data connectors inbuilt. So if you see, it can connect to Power BI database, Excel, CSV, and the most useful tool is converting to PDF also. So PDF converters, paid converters we don't have. Client data is confidential. We cannot use an online converter. Actually, we can use this interface even to convert PDF files. So actually, we have used it for forensics audits where we have more than 11,000, 12,000 pages of PDF bank statements. So where we have to convert, then make it into table and analyze. So actually Power BI does that job very well. It is very easy to convert data using Power BI. So these are mostly we'll be using text, Excel or PDF, and there's an option called folder. So if I'm going to connect to a folder, what all data is in that folder, every time that data is going to get updated, my data will also get updated. So it's like multiple files at the same time I can get connected to. So I can connect to SQL database, Sybase database, Oracle database, whatever, almost more than 80 different databases are available in Power BI desktop for connecting. So now we'll import a So this is the data set which I have imported. So now if you see, this is the Power Query editor. If you have used any Power Query in Excel, it's the same editor what we are using in Power Query editor. So I'll have two instances always. So I'm having Power BI desktop as one instance and Power Query editor as one instance. So I can do whatever changes I require to the database or the base data set in the Power Query editor, and visualization or querying part in the Power BI desktop. So basically I'll be doing here data cleansing activities where I want to convert some data, or I want to combine some data, I want to merge some data, append 5 months data. So GSTR 2A reconciliation I want to do. So 12 months data together, if I take only, I'll be able to do some decent reconciliation. Otherwise always I'm going to have carry forward problems. So appending the data, all this, wherever I'm going to do some activity on cleaning the data or making the original data ready for analysis, all that I'll be doing in Power BI Power Query editor. So basically now this is a expense dump. So in this what we are going to do is we are going to do journal entry testing for holiday entries. So Sunday entries is a basic audit test which we have to do on journal entry. So that is the one we are going to do. So now I have a document date and posting date. So posting date is the category which I have to take for identifying whether it was posted on a Sunday or not. So here in the Power Query Editor, I have two tabs. One is called Transform tab and one is called Add column. So I want to transform, so both will have similar menus, but in Transform tab means it will change the original data. In Add column means it will create a new column for whatever change I am doing. So I am going to add a column for giving whether it is a Sunday or a which day of the week it is. So that is my first query which I am going to do. So I will take day and I will add the name of the day. So now actually if you see I would have I have created a new column called day name with Sunday. So now I'll close this and go to my Power BI desktop. So it's applying whatever changes I made to my model. So now if you see, this is my dashboard. So here also I have three views. This is the database view, that is I can view the table directly, whatever is the source data, however it is I can view. So then I have the relationship view. I think all of you will be aware of ER diagram, entity relationship diagram, which we see in Access. The same thing works here also, where actually we can create relationship based on primary key and foreign key between two different databases. So for audit, basically, we will not have much scenarios where we have to compare too many databases for our audit procedure, unless you are going to do three-way match outside the system. Only things like that will be requiring a lot of different databases where we are trying to establish connections. But our normal generic audit tests are there, no? Like duplicate invoices, duplicate payments, identifying credit limits, or this JE testing. All this is generally one data set based only. So it's not very complicated to execute. So now this is my dashboard view. This is the place where I'm going to build my reports. So Power BI gives us a platform where we can create interactive dashboards. So whatever we are calling as a storyboard, storytelling, so all that is going to be narratively explaining data using visuals. So mostly this tool is used as a data visualization tool, but it has the capabilities for analyzing data also. So it is our creativity on how we are implementing the audit test using this tool. It's not very difficult. Maybe the management objective will be at macro level consolidating data. For us it is going to be identifying the exceptions. Only the objective is different, but data manipulation or data crunching is going to be similar. The activities which we are going to undertake is going to be very similar. So now I have created day name. So the day name is the field which I have to populate first. I'm just dragging and dropping that field. Then I have amount in local currency. It is a SAP database, so amount in local currency. I am to change the chart type. So now within three keystrokes, I got what are the entries passed on which date. So now I want to see what are the actual entries passed on this date. So what I can do is I am just going to populate document date. Then I put GL code. So I want to know which GL entry has gone. Then again I put the amount. So now I'll populate that as a table. So now if you see, I can just increase font size so that so actually this can be used as an audit tool itself, not just as a documentation or finalization thing. So now I can see what are the entries passed on particular date. So now every time I click on this, click on anything, the data is going to change for that particular data set or data model. So if you see, I think I zoomed too much. Yeah. So if you see actually the total column, so totally we are having entries for 85 crores, 43 lakhs, 95,000. So for Sunday, the entries passed are 1 crore, 49 lakhs, 35,000. So these are the entries passed. Now these are the entries which I have to go and check in my audit. So when I get the data itself, these are just parameter testing. It's not like the entire, we can design such tests also, but this is like overall macro level parameter testing based on which we will design our audit procedure. And here also, now this screen directly you don't want to take to your auditee, because obviously you'll be like where you took, why you took, and next system interface also will be problem, because this requires Power BI desktop to be available in that system so that you can open the file. So what we can do is we can just export this data. Okay, it will automatically export as a CSV file. You can rename it and save it. So that data alone we can include in our audit program, where we have to document what are the reason for that entry to be coming on Sunday. So there are most of the entries, if you see, are journal entries, GST input tax credit, and freight entries, forex entries. So these are the sum entries. So here itself false negatives you can pull out. Like GST entries, it's not material if it is any day it is passed. So all that you can filter out and take only the transactions which you feel more material, which you have to really go and check there. So that exercise also we can do. So now instead of seeing some 20,000, 30,000 line items, I have 161 items which I have to work with. So this is one audit test. So next, with the same database, one more test we can do. So cutoff procedures. We want to see how much previous period item is coming in this period. So that is one audit procedure which we'll do with date. So basically I have taken date specific test in this case. So one, I'm going to take document date. I'm going to make it a slider. So document date, if you see, I have from 13th January 2018 to 30th September. So the only problem is it automatically comes with a smaller font size. Yeah, it's increasing. Okay, so next I'm going to do the same thing for my posting key. I can use Format Painter. So your posting key is only from 1st April to 31st August. Something. So now I want only the entries which are going to come from till 31st March, 1st January to 31st March, which is actually not in my audit period. So only that transactions I want to verify. So again I can actually populate one more table with document date, GL, and amount. So basically one more advantage of this tool is we can reuse this data. Just in a minute I'll show you how we can reuse this data. So now whatever data I'm going to have, so only those data is going to come in my exception. It's like I'm generating exception reports. So in Excel, if I'm going to prepare same exception reports, it will work first. I'll not say it will not work, it will work. The only thing will be that I have to put multiple filters. Next, I don't have many inbuilt controls in the system. Then the problem is large volume of data means I cannot actually, to open the file itself it takes lot of time. If I'm going to have a data set of 5 lakh rows or 6 lakh rows and I'm going to open it to select a sample of or apply a filter where I'll be getting only exception of 30, it's going to take lot of time. But here the processing capabilities are much higher. So that is the one advantage why we can move to this tool. So not just this tool, there are a lot of tools in the market. So the most famous ones are Tableau, Power BI and Click. So these are the three prominent tools in the market. Of the three, actually Power BI has a free version, desktop version, where we can use and save file locally. But Power BI server version is paid for, which we can use if organization is opting, they can use it. But for us, actually desktop version is enough because we are using with client data. We are not going to save any data centrally. And it's better for us when we are going to have some real exception reports for data to be resided in one system. Because actually that time confidentiality is much higher. When we have the whole data and nobody knows what to do with the data, no problem wherever the data resides. When we are going to get actual exceptions, actually lot of cases whenever we apply this, we uncover lot of frauds, which were not intention of the audit. There are a lot of duplicate creditors. One time we saw a simple test as GST. In GST when we dedupe, there were some mismatch. And that is when they went from a VAT service tax regime to GST regime. They didn't do the dedupe control for creation of new GST number or a vendor code. So what has happened is the company had created, I mean the dealers have created multiple duplicate vendor codes using same GST number. So that is actually a fraud indicator. So it may be very simple audit test, but actually when we get the correct exceptions out, it is a real value addition for the management and actually a very good risk indicator for us. So both ways it is good. So next thing is, now I have, as I told you, I have taken an expense dump from SAP. So considering all of you, we work with ERP systems or Tally. So maximum of our clients are going to use 3 or 4 systems, or maximum 5, let's take. So what we can do is, in edit queries, we have an option called data source settings. So for all SAP clients, we can have one data template sheet where actually every time I export an expense dump, it is going to come with similar field names or with minor changes for client wise. So I have to bring it to a common field name where if the data is with common field name, I can just go to this data source settings, change source and give my new data source path. Automatically all the reports will run for the new data set. So it can be for the same client, a monthly audit or a quarterly audit or annual audit, or across clients with similar systems where data is going to be, the output data is going to be similar. So like if you're going to take 26 AS reconciliation or GST reconciliations, it's going to be same across all clients. If you're going to take scenarios like JE testing, for ERP based, it's going to be same across. Or banks means it can be same across same CBS systems. So like that we can generalize our template sheets. So now I have shown 2 audit tests. Actually we can just keep adding sheets, complete all the JE testing. Let's say we have 12 parameters to test in any data set that is having journal entries. So all 12 I can actually have in different sheets here and just change the data source. All 12 sets will be able to generate the report at one go. So this facility is like very useful facility which is available in Power BI. So in Excel we have a format called save as template. So here also we can save as template and also do the same thing. Here also that file format is available, save as template. So every time you open the sheet, it will automatically ask for the new path name. So if it is same client means we can have the existing data inside and append new data also. So either ways actually we can use the system with different data sets over period of time, or it can be over different clients, however we can use it. So these are the 2 tests we thought we'll showcase just to have the feel of the application, that it is easy and you can also try it.
They have a dashboard.
Dashboard. So MIS dashboards are also available. So it may not be in laptop. It's not here, sir. It's not here. It's in my laptop.
That's okay.
It's not here.
Questions.
Yeah. So it's basically a simple audit test which we have taken to how to use a visualization tool for audit. And next is how while visualization, like instead of doing audit procedures, like let's say we are going to do stratification for sampling. So we are going to stratify using filters or pivots. So actually, there are more chances that we may miss out some important indicator and stratification. But in visualization, it is not the case. 99% we will identify the correct outliers. So apart from this tools also support statistical models. Like if you want to put a box plot to check the range of data, box plot to identify outliers, we can actually import the visual. So here by custom build we have some 24 to 30 visuals which are inbuilt here. Apart from this, extra visuals also we can import. So actually marketplace is Power BI's marketplace only. It's like free add-ins, just that they didn't want to give everything in one place, they have given it separately. So there if you see, there are a lot of KPI indicators, statistical models, core plots for identifying correlation or movement between different GLs. So all that also we can actually try. Yes, sir.
Then it is running.
Yeah, internet is running.
Okay, last question. Just
Yeah.
put that either D3JS or chart.
Yes, sir.
Do you have any questions? These are also getting boring. Alphas, betas, confidence levels.
So we'll develop more questions on reading that.
Okay.
Has this basically processor speed, is it important for this?
Not really, sir. If you have an i5, i7, it's okay. Generally, we recommend desktops because everything is changeable. The bigger hard disk, bigger, more RAM. Desktops are fine. Fine. No, actually, all of it works in the RAM. So the more RAM you have, the faster it goes. 8 GB is okay, 16 if you have. And it converts everything to tables. It's called Vertipack tables. Internal structure architecture also is available. For the first time, Microsoft has released this as I think they want the public to get back a cheaper testing place. Instead of using employees, they use the general public. That's like free samples you get in exhibitions, toothpaste or something. So. And yeah, that's one thing. But the other thing is that if more and more adoption of these tools we use, because everywhere they still use this IDEA and ACL and what we call the standard audit test. But when the environment itself has changed, where is the standard audit test? Can't use the standard audit test. It's like checking for a tube in the tire, there's no tube. So then you have a checklist, they have a tube. Some fellow take it off. Anyway, that's okay, but my main thing is I just want to show you, I have no particular tool. Like you can use spreadsheets, whatever like this, and then you have to go to R language, some learn Python. So what we are saying is we need to invest more time. In fact, there's on the internet, it's slightly old, but you can get a mapping of COBIT to IFC. IFC is from the Companies Act and COBIT is from the ISACA people for framework for their this EDP system, IT systems. They have made a huge, most of it are charter accounts only there. They also study ISA, so that's ISA whatever. You can go through that because many times we do the IFC as one separate, some control testing something, and this side the COBIT somebody will certify and he'll go off. But together it doesn't make sense. So it's like it's something, each one doing something independently but no coordination. It's like 4 fellows came late for an exam. They all came in the same car and they told the examiner we had a flat tire. So the examiner said, okay, I'll give only one question. You sit in 4 different locations. He gave only one question. Which tire was flat? If they're telling the truth, you'll get the same tire. If they're bluffing, you'll get different answers. So when we go to all these multiple reports, you may get work from regulators. Very soon you will get work from them. You may get work from auditors. In fact, we audit of IT, audit of internal audit also. Then you are tabulating a lot of reports. The IT guy, statutory auditor, concurrent auditor, that's for banks. But if you take other people, there are some stock auditor, there are some valuation auditor, some forensic auditor. None of it will be correct. If you tabulate the whole thing as one big picture, and then you get a report from World Bank, Asian Development Bank, saying that this project is not correct for seaports, airports, all that, so roadways, National Highway Authority. So they say this is not, the whole thing is wrong somewhere, but each would have been right in its own way, but it doesn't tally across the whole thing. So those are the issues we are all facing. As the clients get bigger because of integration, absorption, whatever measures, whatever, and the audit firms get smaller because everybody wants to be independent, freedom, some stories they tell. How do we manage? So that is the problem today. So like event management or whatever, no, it's getting more and more complex because today we have logistics companies, we have these, okay, this got this thing on board. We have this supply chain management. We have, for instance, we say Amazon Prime Delivery, same day delivery. Does it mean they keep everything in every place? No, you can't fly private helicopters in India. So how do we get this across? These are the questions we're going to ask ourselves. You know, can he predict the demand? That's more important. So if they can predict the demand, they are in business. How do we know what you'll buy? That each of you has been imprinted. Google does it, Amazon does it, a lot of people do that, so they know your preferences. If you are in the system, they roughly know, at least 70% accuracy, 60% accuracy, what you will buy. Well, that's good enough, no? Because that's how the business is running. So we will try it. So you will know what exactly a client wants. Yeah, you put something up there. Okay. See, now this is from a website called d3js.org. D3 is data driven documents. JS is JavaScript. Today they teach the HTML in schools also. JavaScript is a small language. Anyway, if you download your tax files or GST files, you get it as a JSON file. That's JavaScript will read it. You must have already gone through it. So you can put your stuff over here. Okay, now if you go to the Uber rides, you went up somewhere. Because the Uber rides. Okay. Okay, now what we are doing is, now we see we got Uber is about some taxi company which runs from location to location. Now you want to know from which location to which location you are getting higher traffic. So which has got the mouse pointer is the location, and from there you can see the traffic flows to different other locations. The blue is the, okay, she moved it. No, just go back to the original. So the blue is showing you the thickest arrow, which means most of the traffic moved from that source location to this destination location. Any idea where else this can be used?
Cash.
Yeah, money laundering. So we'll know from which country to which country the maximum cash flows are taking place. So REBIT is the technical division of the RBI. So they do a lot of studies like this. So if you get a money laundering notice, it's because they already know what's happening. So you can get country to country. So and the code is also given there. You can use it, but you need some young guy who knows some JavaScript. And this will run in your web page itself, a browser. I mean, not the web page, the browser. So when you make a presentation, it will be interactive. It's there in your own hard disk. Just open the browser, open this up. Data is taken from a JSON file, and you have the animation too. So there are so many types of graphics. If you look at the, if you just go to the top, so many types of graphics. Okay, these are for flavors because today you will get peach tea, jasmine tea, and all that. Okay, but very soon already there was some chili ice cream somewhere. So all kinds of stuff you get, and then we need to know popularity of the flavor, how it works, branding, what components go into it. That doesn't mean if you have 2,000 flavors, he's got 2,000 types of ice creams. He's got only 6 or 7. He blends them. So basically, that's what happens. And so as you do more and more operational audits, more of these, you want to present this, you want to prove your point, you want to sell it to the management. Please look at all these visualizations. This is d3js.org. There's another one called chart.js. Mostly used for this financial share movements, those kind of things. Okay, our pictures. Anyway, go through them. Go back, give it a try, and we will all use them for something. This is chart.js. The other one was d3js.org. It makes it very easy to write reports. No point writing reports. I mean, you have to get it this way. Okay, that will show you some high lows and movements, trends, patterns, so many things you can check out there. Okay, any questions on this? Because right now we are cramming everything into one session. So bottom line is, where do we get data from? Big data available outside. public data available outside, organizations' data, if they have an ERP, it's easy, but if they have Tally also, you can take dumps and you can work with it. If you don't have anything, only notebooks, take a photograph, make it PDF, then convert it in Power BI, and you still get some data. So you can, because some of these banks will give you PDF bank statements, you think you can't read it, you can. So the client also thinks he outsmarted you, he hasn't. So any questions? We will go to the last one. Can break. Any questions? The last one is a bit of a problem because I have to keep my.
Power BI will read out scanned PDFs also.
Yeah, as long as it's reasonably clear. But otherwise, what we have to do is we have to clean it. Actually, the three things which I forgot to mention. There are three steps you take. One is called ETL, extract, transform and load, where you get the data, images, pictures, web pages. Actually, it'll read web pages also if you go to the get data. It'll open web pages, URLs. You can take data from Wikipedia, government sources, dumps from anywhere. It's all fine. It'll read a lot of data. Direct database sources also. So that is extract. Then you have to transform it the way you want. It's called data modeling. So once that is done, then we say load it into the whatever database or whatever. A table actually, we call it data set here. So the ETL is one step. In fact, that itself is a separate step. Then comes your processing. Whatever you want to do, statistical, mathematical, comparative, whatever. The last part is the visualization. How do you present the output? So if you take it as three components, extract, transform, load, processing and visualization, Power BI will support all of them. But if you want to do it better, processing in R, you want to extract some other thing, visualize somewhere else, like J3, D3JS, that's fine. So Power BI is just two because it's free. You can use it actually. No, what I'm trying to do is make the easiest tool show the easiest tool, so we don't have to struggle with learning languages and programming and all that. So this is all ready-made.
Better than ASL and ID?
Yeah, they are outdated now. See, that's what I said. Now the audit environment has changed. The tool could have changed, but then complacency. So because everybody sends the greatest audit tool in types. I mean, that could happen to us also. So there are competing exams, courses. So maybe one day they'll say CA is useless, like BCom, B's. So it can happen to anybody.
Web page, sir.
Oh, you got a web page, okay.
CA Institute.
Which one?
CA Institute web page.
No, I was asking you to read from a web page.
That's sir, CA Institute page.
No, but what did you read from?
The table is having this data.
You just click and go to the next. Web view.
Web view la dhaan
கீழ வாங்கல.
இல்ல but இது வந்து preview. I have to go here ஒரு நிமிஷம்.
They show the final version. No, we just want to show you that it's possible. If somebody says
The landing page la irundhu மாறணும். Landing page is different from
Oh, now you are telling to go
I
to
see.
new portal. Okay.
So you are looking at the landing page.
Okay. But because I put that URL.
ஆமா.
no, you can click on any link, it will go somewhere.
Yeah.
Student results, president speaking somewhere. So if you want to find how many presidents we had, you can do it through Power BI also. It's okay. Anyway, basically what I'm trying to say is, you have to challenge what we are doing now. Don't stop with what we know. Ask the more newer questions. Okay, so I mean, I can see a lot of graphs and finish of this arm. I think before the next class. Break.
4:59.
Okay. I'll just finish this hour, then I'll go to the some risk-based stuff on manufacturing. We'll have a break now.
For 10 minutes.
The fields you are seeing there is the first one is the IP address of the location. The first is V1. I think you went up to V10.
So V1 up, here.
So there, okay. V1 is the IP address. V2 and V3 will give you the whatever the authenticated user. V4 is date and time. V5 is the request header. V6 is the status response that will give 200. Like for instance, some error code it will give, like 404, not found, whatever those things. Then you have the V7. Okay, we'll just concentrate on V8 and the error code. I think that should do for the explanation. What we need is how many seconds the web server took to respond to your request, and what was the answer to your request, failed, accepted, whatever the result. So if you look at the program, the top part where you see all that, where the cursor is moving, that's the part where we are extracting the log, creating headers for it. If you go one by one, we can just show it to them. We can execute line by line also. Let us think we are in the debugging mode. So we are going line by line for the time being. So the first part where you are reading the data would be the logs. You read table, that's the first line. Don't have the pointer, but it doesn't matter. Once you get the logs, you can see it at the bottom here, the blue color stuff shows you we're executing one line at a time, like a debugging mode. Then you go to the next one where you have the names for the logs. You are naming the fields 1, 2, 3, V1, V2, V3. Then you analyze the logs. You put summary V8, that code. You can see the summary. It should appear somewhere where you can see the mean, median, the first quartile, third quartile. It gives you the distribution of that data. Then as you go further, you plot a graph for it. Okay, that's one on the right. That's the graph which is plotted. It shows you the delay in time, and the average time it has taken about 7,186 somewhere. It's over there. That would all be in see computers count in centisecond, millisecond, second. So normally that's the count. The response time is fairly decent, but there are some responses which have gone into 58,000 seconds or something. That means it's a failure. The web page did not respond. Maybe network trouble or some problem with it. Okay, then you go to the draw the bar graph. Then you can go ahead with the hours and the time. Create the plot of traffic per day. You have to come a little down. You have to create the plot of the traffic for each day. I can plot it. Okay, then once you do that, you can go straight to the plot of the hack attempts. A little further down. Okay, just going through it quickly. Actually, I'll mail all this to you because there's nothing important in all this. Yeah, summary of the hack. Okay, if you see the summary of the hack at the bottom, it is showing you for each of those addresses and the port it has come from. V6 is the field, one of the fields, and you can go to the next one where it shows you that the error codes. Yeah, you can do. Where's the final graph? It shows you there are no hacks.
You can see it here.
Yeah, but the graph is
No,
no, there's no graph. I'll tell you where the graph is. It's on this line.
not able to.
Whatever. No, the last one. Right?
1 minute.
Yeah, you got
wait,
it.
1 minute. It's loading.
No, that's not. See the last 4 lines. Okay, basically what we are saying is, at least summarize what I'm saying. See, when you have a web page, somebody makes a request to the server. That's called the HTTP request. So the request comes in. The web server has to check whether it's got the page or doesn't have the page. Oh, okay, hold it. If it has the page, it will send it back to you. If it doesn't have the page, it has to report an error, saying what's the problem, authentication or failure, or I can't find the page or whatever it is. Each of those errors have numbers, like 200 is success. I just wrote it down. So 404 we know because that's error. Basically, a few other numbers would be like 206 is partial content, it couldn't transfer it properly. 301 is it's got a URL redirection, the page has moved. 404 of course is page not available. So you get some error status, you get the page or an error, one of the two things. Now we are on the server side, we got the logs on the server side. What we want to know is how many of these were actually serviced, how many could not be serviced, what's the average time taken to service. This is more like operational parameters. Then we want to know whether somebody has been trying a denial of service attack. So flooding the, simply asking for web pages and creating traffic. We also know if somebody has stopped your server. Thieves will sometimes stop the server, finish their theft and then restart the server and disappear. So we need to know that. So if you see the last, that blue, where it says hack attempts, and if you see they're just straight blue lines, which indicates that there are no hack attempts. Now this is all based on probability, exponential smoothing, all this data is all built into the R functions. I just ran through it. You have the time function, the smoothing function, whatever. And that last graph you have is your audit evidence to say at that point of time. It's a point in time. It's not a streaming analysis, only point in time. Like they do this VAPT test, some point in time. You can say that yes, I did my test and there were no hack attempts or whatever. Actually, we should get some more graphs, that Sunday traffic, hourly traffic and so on. No, basically what I'm trying to say is using some software, some program, and using those logs, you can keep this paper, you can just find the day traffic and the time traffic.
This is visit per day.
I can't see any graph. Oh, okay. This gives you a time-based graph on visits. This actually, if you go to the d3js.org, you will find the traffic analysis far better. That is usually done in marketing audits, where you want to know whether they saw the home page, how long they stayed there, how many links they traversed deep down, and how long they stayed in each of those links. Some people will add it up to the cart and then exit. That means he's a potential buyer. So you keep counting the fellow till he buys it or whatever. So you can see the traversal of the links also, but for that you'll have to use a sunburst diagram. Okay, maybe we'll just wind up, somebody's waiting. Okay, anyway, that's just to give you an idea. Then can you do the other one, the daily traffic ones? No, what I'm trying to explain is that you take the logs, analyze the requests we have got, find out how many we serviced, how many we could not service. If we could not service, is it our fault or somebody else's network's fault or something? And is it like sudden undue traffic which has caused a major failure in your servicing? Or if it's like just general traffic, you saw the green bars, they were almost the same height. It didn't show any peak or any suspicious thing. And if you see the blue line, it shows it evenly, so it's fine. So there were no particular hack attempts. How do you define a hack attempt? If we say traffic is normal, we have serviced most of our requests, failures are very low. We say generally things are fine. Okay, it's all right, okay, doesn't matter. So what I'll do is, you have to go to the Excel sheet. Now I just want to finish off because we've got another class. I think we've got some time telescoping issues here. No, okay, now actually the class we are supposed to do now is called Risk-Based Internal Audit in Manufacturing. I'll basically explain what manufacturing is, all of us know it, so I'll just quickly iterate. We have continuous manufacturing, we have job work industries, and today we have a new type of industry in India where the manufacturers don't manufacture anything. They are only packing, white labeling, whatever. So that is also called a manufacturing, make in India kind of manufacturing. The other thing is we do this blending, like liquor factories. It's a paint also. They used to make so many colors of paints. Today they make only one color. Which one? White. What is how do you get the other colors?
Mixer.
The dyes. So I put the dyes. They got a big unit in each showroom, whatever the sales outlet. You give the color code, he punches a few numbers, you get the color. So what is happening is in the terms of manufacture, inventory, logistics, everything has changed. Now it's no longer carrying 100 types of colors, only one color and a whole lot of dyes. So all that makes a big change in how our audit is being done. So that is some of the stuff we have to learn. And now we have a lot of franchisee cooking, whatever, franchisee food outlets, where they don't cook, but the central one like Anand Bhavan or Asarana or whatever, they bring the food and deliver it. So if he says 10 pongals, only 10 pongals, 11th pongal doesn't exist. So he doesn't make anything, he gets it from somewhere. And we also have this franchisees in a lot of other places, like you heard of the Swiggy kitchens. Yeah, they're location-based kitchens, no eating, only deliveries. So given those models, and see, we'll copy. Maybe Swiggy is all India, but some local fellow will copy, some local stuff he'll have. Now we may get this local fellow's audit. Now he's not 100% Swiggy, he doesn't have online app, this, that, something. Now he's got a faulty system, like not faulty, but a primitive system. But he's still doing business which is, he's imitating somebody else. So in such cases, our risk becomes quite high. So here I'm just looking at one of them. See, the whole background is taken from COSO. They are the internationally accepted standards for these risk-based audits. Okay, so now we are looking at this purchase. You can just go to the next one. See the control active, don't scroll it. See the control activities, what are we at? Basically I'll make it simple. See, for any particular item, there will be a control objective. There will be a potential risk. Now, potential risk can be we buy from an unauthorized supplier. The control objective is we don't want to buy from unauthorized people or not vetted people. Then if we have a risk control measure, risk mitigation or risk control measure, how do we do it? So we'll say we have some process, we evaluate the vendor or whatever it is. So then we are talking about, can you just scroll up? I have to scroll up to see the headings. Okay, then we go to that also control elements. I have to scroll. Then you have this financial statement assertions, which I think you can skip unless you're doing IFC. Then you can't skip. Okay, then you have the control activity type, you know, the manual, etc. All that, and then we'll have okay, just scroll up to the part. Who performs it? We normally put a designation of a person, how frequently it is performed, etc. And you have to keep scrolling. Then you have to keep scrolling to the right. That's the end.
Yeah, it's good.
We have to test it. No? So then you give your risk rating. That's what I was asking about the risk rating. So now what we have is a kind of a template. This from Corso you can take from anywhere. This is supposed to be acceptable worldwide. Now why I say supposed to be acceptable is this is only the risk control matrix. Then the auditor goes and fills up the matrix. He goes there and then he sees the actual procedure for evaluating a vendor. And then he decides, okay, this is foolproof, or if somebody recommends a fellow, you actually have to take him in. So all that you have to write, then rate your risk. Now once this is done, but actually you can't do this till you do the process mapping first. So we need to know what's the process. How do you buy? Because I told you there's so many types of things you buy. If you go to a garment factory, buttons, thread and all they won't consider as raw material because it's too small. Now if you go to, different businesses have their own peculiarities. Now suppose we looked at some very common business in India, like say fruits for instance. What do you do with the spoiled fruits? Because we import them by containers. They come from China, Australia, etc. somewhere they land up. Transit time will be 15 to 20 days. Then customs clearance is a day and there's a Coimbatore fellow one more day. So that's about like 17 days. You pick up the apple or orange, it's fresh. So how does it stay fresh?
Cold store.
Maybe some of them, yes, meat, whatever. But what about the vegetables and fruits we are getting, the broccolis and see, you get cauliflower throughout the year. We don't grow it. You get fruits throughout the year, imported stuff. No, that's what they tell us. But basically, they're genetically modified not to get spoiled. So they have also process called freeze drying. They got different processes. So all those we need to study now. So if I'm going to audit somebody who's in the food business and technology has changed so much, we'll have to look at it because insurance for us will be a nuisance. The spoiled fruits are usually, the container is insured. So the spoiled fruits also, they need a certificate from Chartered Accountants. So you need to certify correctly whether it's really spoiled, pilfered, or this fellow sold it off on the slide for cash and he's telling it all got spoiled. So because corporation buys it and they sell compost now. Corporation of Madras makes compost. So given all those facts, we need to understand that business. Now if you take a milk which is delivered to you in packets, plastic packets every morning, how old is the milk? Yes, somebody must have done dairy farm or dairy company or it. Sometimes, most of the time it's about 6 months old. So what happens is, the cows are in specific locations. Like say, Nellore or Hyderabad or somewhere. You can't have cows in the city, it just doesn't work. So you got to have them somewhere, large farms, they're cooperative farms. So the cooperative guys, they sell it to the dairy company. They put it into big tanks, then they semi-process it, and then it's stored. And whenever based on the demand, it's a predictive analytics, based on the demand, festival time, Diwali time, whatever, some demand we'll have. Based on that, they will pasteurize the milk, add all the additives, the fat content, whatever. And then it is flows out into your tubing, it's packed, delivered. You can eat it, you're still alive, you will continue to be alive. It's all checked, pasteurized, it's food grade stuff. So if some of the fish, if anybody is here eating fish, the fish is mostly 6 to 1 year old because it's caught in deep fish. See trawlers, it's frozen there and brought here. So you know a lot of stuff now. Today fish is not caught in the sea. Where do they come from? The farms. They come from farms, fish and prawns, and that's why they exported the whole year. All year through it is exported. So an auditor who goes to one of these, how is it going to work? You'll ask him stock in trade, valuation. He'll show something, this is babies, this is hatched, that is some work in progress, something he'll show you. Now you have no idea, so what do we do? That's why we need to study. Okay. So when I say procurement, what procurement? Procurement can be, you can buy eggs, you can buy the chicken, you can, the small chicks, you can buy the full grown hen, you can buy a dressed hen. It all depends, or you can buy the cooked food itself. So we don't know where in the procurement stage we are, the risks will be different. Is that making somebody see in the paper, instead of goat meat, you got dog meat. That is because you got the meat, then it's a procurement problem. If you bought the dog, goat, you wouldn't have bought the dog. So it depends. So the risks differ. So before I just wind up, I'll just show you a small video clip. And here we answer what the clip is trying to tell us. Let's make it faster.
So audio recording.
I just...
audio தேவையில்லை.
No, just see it and tell me the answer. That will do. Okay, I think you learned a lot today. Now you have to try it out. You have to, even risk matrices, you'll have to look at. If you get everything from the internet, read it up because that also gets obsolete. So you have to read up. So, this is a small clip which I thought if you see, it's only a few seconds. Put play or something. Oh, it's playing but no picture. Okay, if it doesn't work, then we'll leave it. Yeah, it's playing. I don't make it so big, it won't be. Then you have to play from the beginning. Okay, there's a tortoise in the desert, and then the rest of it you'll have to tell me. I think that size is sufficient. Yeah, that's right, but then we are auditors, no? So now you see the second clip, and then you can tell me what you made out of it. You have to drag it diagonally, otherwise it will be out of proportion. So now we have seen both the clips. What do we learn from this? Risks keep evolving. So the first time it was thirsty and it wanted to, some beer can fell out. It picked up the can and then it played football, so something like football. Now the driver went back, learned how to play football, came, second auditor going and learning his risk control activity. He came back, but by the time the turtle has already learned how to drive. So that's the problem. That's how the risks evolve. So every time you go back and read our books and come back, the client and the thief have already learned something more than that. So that's how the risks evolve. Okay, so with that I'll wind up for today. I hope it was a useful session. If you have my email, you can mail it. I'm free to answer.